Annuities can be good or bad. They're really neutral. The issue is a lot of times people don't understand them, or people buy them not knowing what they need, or buying the wrong type of annuity based on their situation. When people say, oh, it's a bad investment or it's a good investment, well, it all depends. The truth is, or as I mentioned, they're neutral. They're not good or bad. The real issue is what you need and that they're going to work for you. And if they do, then they can be awesome. But if they don't, it can be a disaster. Hi, I'm Annette Bau, host of the Wealth Inside and Out podcast and founder of the Millionaire Insider. My mission is to help you simplify the money game so you can create a financially secure and fulfilled life without having to have a PhD or spend countless hours on your finances. You're going to learn how to think like a millionaire, stop worrying about money and wondering if your financial house is truly in order, and instead spend your time doing what you love. With over 3 decades advising 7, 8, and even 9-figure millionaires, and now joining that elite group, I'm in a unique position to help you make the best financial choices so you can create a secure financial future and retirement you love. This is the Wealth Inside and Out podcast. Today's free resource is our residual income guide. You can go to themillionaireinsider.com/RIG. Let's face it, if you are thinking about retiring at any point in your life, or maybe by choice or not, you're going to need to understand residual income. And that's the kind of income that you do work once and then you get income over and over again, or passive income, which is similar, where you put a lump sum amount of money in an investment and then you generate revenue from it. The residual income guide is going to give you the A to Z on that and really provide you insight so that you can make the most informed decisions to create that secure retirement you love. So again, themillionaireinsider.com/RIG. For today's show notes, you can go to themillionaireinsider.com/124. Millionaireseries.com copyrights all materials and intellectual property. This information is for general informational purposes only. It is not intended to replace any advisor or specialist or to provide any investment, financial, tax, retirement planning, or healthcare advice. It is not intended to substitute any personalized investment advice or any professional advice. For additional disclosures, you can go to themillionaireinsider.com/ERS-disclosure. By accessing this content, you agree to hold millionaireseries.com and its affiliates harmless for results achieved or not achieved. Now, if you've ever wondered or asked if annuities are a good investment, you're not alone. It is one of the most common questions I have gotten over the last decade, maybe even 2. And what's so funny is that some of the things I'm going to share today, not everyone's going to agree with. That's the beauty of it. But, I don't really see annuities as an investment. So I'll explain that in a minute. And I think a lot of times people are like, what? But I'll explain that. But I don't. I don't like them as investments. I like them for a specific purpose. So we're going to dive into that. For over 35 years, I've been advising clients, many of whom have lived their entire retirement in front of me. I've seen what's happened, and I've seen people who have more amazing lives than others, and ones that have less worry, anxiety, fear. It's been critical to me to figure out what really works for my clients. And then now that I am starting to approach pre-retirement for myself, and I want to simplify this for you because it's such a common question. Whether you're 50 or 70, and actively planning for retirement, or maybe you're already retired, understanding how annuities work can be a game changer, both for your confidence and peace of mind, as well as your overall plan. So let's dive into this. So what is an annuity? It's a financial product offered by an insurance company. In simple terms, you pay a lump sum or a series of payments to an insurance company, and in return, the insurance company provides you with an income or with growth of that asset for a specific period of time. Now, there are different types of annuities, so we're going to get into this, and then I'm going to explain to you why I don't look at annuities as an investment, even though technically they probably are. So we'll get into that. The different types of annuities. There's an immediate annuity, meaning you invest a lump sum and then you begin receiving income immediately. There's a fixed annuity that pays a specific percentage for a specific number of years. And that rate is guaranteed, but there is no upside on that. There are deferred income annuities. You invest now and then start receiving payments in the future. There are fixed, indexed, or hybrid annuities, and these offer some growth potential tied to market indices like the S&P 500, as well as other indexes. And these provide downside protection, meaning you can't lose money. And then there's variable annuities. Your returns depend on the performance of the investment sub-accounts, and they do carry higher risks. So you have to be really careful with those type of annuities. A lot of people say, oh, I don't like annuities because the internal costs are so high. And that is true with variable annuities. So you just have to really look at what type of annuity you're buying to determine if it makes sense for you. But each type of annuity serves a different purpose. And that's why I want to talk for 1 minute about the fact that I don't consider per se an annuity as an investment. Now, technically, yeah, you could argue it is. But I personally prefer annuities that are more deferred income. So you put a lump sum amount of money in the product and then it grows tax deferred. And at a certain point, you start taking the money out. The accumulation rate that they give you is guaranteed. So some companies, it's a few years. Other ones, it can be up to 10 years. I've never seen one longer than 10, but there might be. But they accumulate for a period of time. And then depending on when you start taking the money out, it's going to pay you a different amount. One thing I found out, which is so interesting, is that you really have to pay attention to the fine print, because I was doing research for one of my clients years ago. And I noticed that if they waited till 65 from 64, they got a huge increase in money. And when I started asking about that, they're like, oh, yeah, they have bands, meaning like if you have a 5-year band and then it jumps up another for another 5 years and so on. The person was going to get substantially more. Like it was amazing simply by waiting 1 year. So you got to make sure that you really do pay attention to those details. Ideally, you're working with a fiduciary who's got to focus in on what's in your best interest and is going to look at those things. But the reason I say I don't like annuities as an investment is that I like to use annuities for guaranteed income, meaning where they are going to supplement your Social Security and or your pension, and that every month you're going to get income from the annuity company. When you're using it as an investment, meaning to accumulate, to grow, it can work for some people. Some people don't want risk. They see that with an annuity, you can get a higher rate. And I'll just give you an example. And again, you've got to always look at your situation. And this is not investment advice. It's just a concept. Recently, I had a situation where the person was getting 4% on a CD. The comparable rates for the identical product in an annuity was 5.45. So it's just a matter of a lot of times people end up going into more growth annuities because of the guarantee they can get. And they are using them as more growth-oriented assets. I personally like to do, as I mentioned, deferred income annuities where you start taking the money early enough so that then you use all the money up and then every dollar you get is basically coming from the insurance company. It's like free money. And so again, obviously you have to look at a lot of factors, how your health is, what your situation is financially as far as being able to afford to even do it. But if it can work, it can be beautiful. I've had clients who are like, this is the best thing I ever did. But again, it just depends on your situation. The first thing you have to be really clear on is that annuities serve different purposes, and you got to be really clear on what you need before you ever invest in an annuity. My philosophy is that a person's got to be really clear on what need expenses are and want expenses. Need expenses include mortgage, insurance, utilities, food. Want expenses include travel, entertainment, dining out. And the reason I'm so concerned about that is need expenses are basically shelter and survival. And you got to have that covered. Wants, yeah, you may want that, but you don't have to have it. And so, in my opinion, it's ideal to have your plan created around the idea, the concept that you're going to have guaranteed income for your needs. And then your wants are going to be covered by other assets, specifically non-guaranteed assets such as stocks, bonds, or other assets. Now, I do have a lot of clients who have more than just their needs in annuities because they are risk adverse. They want guarantees. They don't want to lose money. The stock market makes them nervous. So does the bond and real estate market. So it's just an option. But again, you've got to look at your situation before you can ever say if it makes sense for you. Now, one of the biggest questions you've got to ask when you're looking at if you should purchase an annuity or if it makes sense is if you want a guaranteed income stream in retirement. Now, most of my clients, I do have some younger clients that are in their 50s, but most of my clients are 60s, 70s, and even 80s. And, their biggest concern is they just don't want to run out of money. They're not as concerned about beating the market. So obviously somebody that is really growth oriented and can take risk all day long, that's not the case. I should say I do have some younger clients that are beneficiaries, and some of them are in their 30s and they're always wanting more and more risk. And so it's just interesting how as people get older, obviously they want less risk. But generally speaking, my clients are not looking to pick the number one stock or, one year make, 80%, the next year lose, 70%. They want certainty. And the value of an annuity isn't just how it performs, it's the fact that it's predictable and that it can provide guaranteed income that can replace your paycheck or Social Security, depending on what happens. Imagine knowing that your mortgage, groceries, basic living expenses are covered. You don't have to worry about it. That's the power of an annuity. And in my opinion, it's peace of mind. The reason I became debt-free over 20 years ago was peace of mind. Oh, I agree. On paper, it looks so much better to have debt, but it's just so nice to wake up and know you have no debt. You don't have to worry about making payments. And trust me, even when you get to that point, you feel like you have mandatory payments because you still have taxes, you still have insurance and all of that. And it does add up, but it's just nice not to have debt. So let's look at a couple scenarios when annuities make sense. You want to replace your paycheck. Once you retire, the paycheck goes away, but the bills don't. And annuities can serve as kind of your own private pension, providing monthly income that doesn't fluctuate with the stock market. So you don't have to wake up and go, do I have money this month to take out? See, a lot of people that are focused in on like dividend stocks, and don't get me wrong, I love stocks and I love dividend stocks, and they have a place in your portfolio. The problem is that if the market drops, say 10%, you have to make a lot more than 10% to make up what you've lost. And the reality of it is that what ends up happening, unless you want to start depleting principal, is that you can't take money out in certain years. And most people's plan is not created to do that. And it can be really problematic. So you want to be really careful when it comes to how you have your income structured for retirement. The next reason is that you're concerned about market risk. You don't like waking up not knowing what's happening, or you get nervous, or you stay up at night worrying. Annuities can offer peace of mind with principal protection as well as predictable income. And that works so well for many of us, especially women. And it's funny because as I share, my husband was completely against this concept, and I just became such an expert at it and I loved it. And I really figured out how to do it from a tax perspective, which I think he also liked, because most people, when they do annuities, are not looking at it from a tax perspective. And so one of the things that I really realized is, how it should be structured. And now he loves it. In fact, last year, we did a significant amount of money into deferred income annuities just for that reason. All right, number 3, you want lifetime income for both spouses. Joint life annuities can ensure that you and your spouse continue to receive income even after one of you passes. And this is especially important for women who statistically live longer than their partners. And it can just give you peace of mind that you have it now as well as in the future. You need to satisfy RMD, which is required minimum distribution. Some annuities work well in IRAs and qualified plans, especially for people who are required to take it. And it can be really helpful to structure an annuity into your retirement plan, again, if it makes sense. And all of that depends on your tax situation. It depends on your overall situation, but it can be helpful. Now, when are annuities not a great fit? They're not a one size fits all. And one of the things that I think is a big problem is if you see somebody that all they're doing is just selling the same type of annuity and it's kind of like a numbers game, I'd be really careful about that because that's not ideal. You want somebody looking at your situation and making sure it's appropriate for you. So if you need immediate liquidity or access to your funds, you should not invest in an annuity. You don't have sufficient retirement savings to fund both guaranteed income as well as some growth to keep pace with inflation. You have a high risk tolerance and prefer market exposure, and you're okay if your portfolio drops 20, 30, 40, 50%. You're willing to take that risk. You've created a comprehensive financial plan and you don't need income. Now, typically, people that fall into that category are people who are older and they've got Social Security and they also have a pension. If you don't, then you just got to look at it. Now, some people will say, okay, well, I'm going to invest in a bond. Well, that's great. The only problem with a bond is that if you're taking out too much money, then what ends up happening is you start eroding the principal. And, or if you're taking it out before the yield to maturity, you've got the risk of losing money because when interest rates rise, typically bonds fall. Now, we saw at the beginning of this year with all the craziness that's going on in the economy where we were actually seeing stocks and bonds decline, which is so rare. But things are really uncertain right now because there's just so many different factors that are impacting the market. So you just got to be aware of what's going on, not only economically, but also politically, because it does impact it. And that's one of the reasons why, as far as with Social Security, you just got to start paying attention because the writing's on the wall that they're going to be making changes. And I always love where, oh, I'm not going to touch this. And it's like, then they get elected and what do? They go right after it. So we just got to be aware of that. This is why starting with a really solid retirement plan is so critical. A well-designed plan is going to give you the clarity of how much money you really need and if annuities make sense for you and if growth or balanced also makes sense for you. So you just need to know that. Are annuities safe? It's one of the most common questions I get. And what's so great about them, you always want to be using a reputable company, clearly. And there are different parameters as far as things you need to be aware of. The advantage of annuities is that most of them, not all of them, but most of them offer a guarantee. So they are guaranteed, unlike stocks or mutual funds. A lot of people like that protection. Now, some annuities will offer guaranteed income. Others offer a guaranteed return. And some offer a potential return with protection of the principal. So again, you just got to look at your situation and make sure whatever you're investing in makes sense for your situation and for the purpose of it. I would not recommend somebody put all their money in annuities. And yet I have clients who've done just that. The vast majority of it, what they're allowed to do because they love it and they don't want to worry. So again, you've got to look at your situation before you can make a final decision. I've got to dive into this because some people just hate annuities. And I think it's so interesting. I was in a conversation where I was listening and they were talking about a specific advisor that hates it and advertises about it. And then somebody chimed in saying, well, when I worked at so-and-so place, he was actually selling annuities. And I thought that was so interesting. So obviously there's something about being able to market and like saying, oh, they're so bad. And then people are like, why are they bad? Well, annuities can be good or bad. They're really like more neutral. The issue is a lot of times people don't understand them or people buy them not knowing what they need or buying the wrong type of annuity based on their situation. When people say, oh, it's a bad investment or it's a good investment, well, it all depends. The truth is, or as I mentioned, they're neutral. They're not good or bad. The real issue is what you need and that they're going to work for you. And if they do, then they can be awesome. But if they don't, it can be a disaster. My uncle, my husband's uncle, went to some workshop and he ended up buying an annuity. Now, he was like 80 years old and he bought a 20-year annuity, meaning that he could get his money in 20 years. He wasn't married. He did not need a 20-year annuity. He needed income. And so, we had a conversation with a guy and he ended up getting his money back, but it was still one of those things where it was just completely inappropriate. And the problem is he had pre-dementia, so he didn't even know what he was buying. You have to realize is that if you're waking up nervous, anxious, watching the stock market, it's driving you crazy, and you're not doing what you enjoy, whether it's hiking, golfing, traveling, you may want to look at some other options that can better fit your situation. What's the role that annuities play in a client's retirement plan? Typically, a person is going to have Social Security. Now, let's face it, if anyone is not thinking that Social Security is on the chopping block, probably is going to be. And now that they're cutting Medicaid, and a lot of people, oh, that doesn't impact me. Oh, this is going to impact so many more people than you realize. In fact, I was just up at my second home, and everyone's concern is which hospitals are closing. And one of the people that is in that line of work said, the major one that's up in Flagstaff, they think is going to stay. But then they started naming all these surrounding communities that aren't. They're going to be closed. So why is that important? Well, first of all, it's important because God forbid something happens to you, you can't go to your hospital that's near you. You've got to go 1 to 2 to 3 hours away. So it's going to be more expensive. And the other issue I think that you got to be aware of is the fact that when they start pulling the safety net, that's what a lot of people rely on if they ever run out of money. So it's just that much more important that you got your own plan in place. And Social Security is going to run out of money sooner rather than later. Now, the one thing I think that's probably good is that the provision on tips not being taxed and overtime, that's temporary. It's for 3 years, and it's only for people earning like under $25,000. It doesn't, if you're doing itemized deductions, you don't get it. So that's not as big of a concern as I thought it might be because that funds Social Security. But the other thing that's going to impact it are undocumented immigrants. They pay a lot into Social Security that they never get back. So there's a lot of factors that they're going to have to bring into account. And those things are no longer going to be adding to Social Security. And now with no new tax revenue coming in, the deficit increasing $3 to $4 trillion. I mean, the writing's on the wall, and we've got to do what we can do to protect our future. And if you're nervous, I get it. I mean, I was just like, oh my gosh. And I know that some of my peers are just, like, this is great because if you have money, it's great. And if you don't, it's not. But I was having another conversation with a woman. She said, when you bring up society and people can get to that next level, it's so much better. And I agree with that. So I am concerned about how this is going to impact each one of you. But what I just want to reiterate is that you got to create a plan. The plan has to be flexible so that you can change it. And then you've got to create the plan around doing what you enjoy and less worry, less anxiety, less fear, more joy, more gratitude, more love, those higher vibrations. And that's what you can focus in on. And that's what you can do to really impact your future and spend your time doing what you love versus worrying or running out of money. So we got Social Security. Hopefully you're going to get something. I mean, one concept they're saying is they're going to just do it where people that get it get like the max of $2,000 a month. Other things I've seen are where they're going to delay it, where you don't get it until, right now you can delay it till 70. They're going to move that up. So there's just a lot of different discussions of what they may do. But the bottom line is pay attention to what they're doing because, as you know, they're not really talking about what they're going to do to fund it. And by the time many people listening to this need it, it's going to be a completely different administration. So anyway, just something to be aware of. Pensions are so awesome, but most people don't have that option. They've replaced pensions with 401ks, which is not ideal, but it is what it is. And then you've got the guaranteed lifetime income through annuities, which I love. I like the deferred personally better than the immediate because you have more control if you need any of the principal. And you have more flexibility. So those are basically your need expenses. And then you've got your want expenses, which are investment accounts that are more growth oriented. It might be real estate, stocks, bonds, business income. The annuity is not all of the plan. It's a portion of the plan depending on your situation. And a well-structured plan is going to allow you to determine what you should do in the different areas so that you're not having to worry about market fluctuations or wondering how you're going to be able to cover your basic expenses. As I have mentioned, I've shared with you, my husband and I have incorporated annuities into our retirement plan, and he was completely against it. He's like, with the amount of money we have, we don't need to do that. And I said, do you know how nice it would be to just every month know how much money you have coming in? Now, we already do, because we already have like 3 solid guaranteed sources of income that come in every single month. So all of our expenses right now are pretty much covered. Obviously, if we have a major expense, that's not. But, we have plenty of cash. And so we've got a plan. Well, when we started looking at the numbers, we started talking about it, and we started, saying, what about this? What about that? And then there starts being all this craziness where the market's up, then it's dramatically down, and it's up. And, it just gives you such peace of mind to know you've got that taken care of, whatever that number is. Now, for us, it's going to probably be about double what we need as far as our need-based expenses. And then on top of that, we've got all of our other money for our want-based expenses. So it just gives us the flexibility to do it. The most important thing is that we're not going to have to be worrying about what's going to fund our next 30 to 40 to 50 years. And that's the same thing with my clients that really have the peace of mind and are really enjoying their life versus sitting around worrying, what are we going to do? And unfortunately, I don't obviously work with a lot of people who don't have money, especially older people, but there's situations where I have clients who have family members that they ask me if there's any way I'll meet with them. And I've just seen situations that are just devastating. Had these people started their plan when they were 50, they would be living the dream life. Instead, they are stressed out every single day. It's just literally traumatic. The sooner you can start, the better. And I don't care, even if you're in your 30s, just start saving. And if you're in your 30s, you're probably not looking at an annuity. You really should be probably looking more growth-oriented assets. That said, I guess I should say it's interesting, one of my beneficiaries is going to put a portion of her inheritance in a different type of annuity, one that has got more upside. It still has some guarantees on the downside, but it's a different type of annuity. It's more geared towards more upside in the market. And then you do have to take on some of the risk on the downside. But she wanted to do that just so she'd have a certain amount of money for retirement and not ever touch it. So again, you got to look at your situation. There is not a one size fits all. But if you want peace of mind and you want to know that that paycheck is replaced and you really want a steady income stream in your retirement, an annuity can be one of the best financial decisions you'll make. So just be aware. The key is you've got to know your situation and you've got to make sure that it's appropriate for you and that if you are purchasing an annuity, it's the right type. It's so unfortunate. I just did an analysis, oh my God, just last week with this gentleman that bought an annuity 4 years ago. And literally, he has made 0.0000. I'm like, oh my God, that is just terrible. And part of it is he hasn't been really paying attention to it, so he wasn't aware of it. But I just see that happening. So you've got to know what you're buying, why you're buying it, what your overall strategy is, and then you got to pay attention as you go through it. In closing, are annuities a good investment? It depends. You've got to look at your situation. You got to, first of all, create your plan, your bigger financial plan, then your retirement plan, and then you can determine what's appropriate. If somebody's just coming and recommending that you purchase an annuity and they don't know about your big picture, it's probably not ideal. So just to reiterate, it's critical that you really make sure that you understand your situation and more importantly, what you're trying to accomplish. And then you make a decision as far as if an annuity is appropriate and if it is, what type. All right. On that note, I want to thank you so much for joining me. I'm Annette Ba'u. All international copyrights are reserved. I'll look so forward to seeing you on our next episode. Bye for now. If you love the content of this podcast, please follow and subscribe to our channel so you get notified of episodes, and also give us a 5-star review and share a comment. We really appreciate it. Congratulations on taking another step to create a financially free life you love. If you're not sure about your financial future or that it's in order, or you are ready to stop worrying about money or possibly the fear of becoming a bag lady, ending up broke in retirement, or you simply are ready to know your financial house is in order so you can have a bright financial future, please go to themillionaireinsider.com/NSF. And that doesn't stand for non-sufficient funds. It stands for Next Step Finance. It's the next best step of what you need to do so you can avoid an NSF notice in your future. Again, themillionaireinsider.com/NSF. The number of women who were not broke or poor while working or married is staggering. The entire mission of the Wealth Inside and Out podcast is to ensure you have the information for you, your family, your friends, anyone who's willing to listen to it and apply it so that you can create a financially free life you love. Again, themillionaireinsider.com/NSF. Until our next episode, take one action that will help you create a financially free life you love. I'm Annette Ba'u, your host. All international copyrights are reserved. Bye for now.